Jerome Powell, the head of the Fed, most likely is going against his own words, and he is probably going to cut rates in September. So why does this matter so much? I like talking about the economy. It's interesting, but I'm really interested in the election. And this is kind of what I think this rate cut is going to affect much more than even the economy. Because if rates are cut, it could have a huge impact on the election. If mortgage rates go down, again, the rates affect all rates, but I'm talking about mortgage rates specifically because that's what average Americans are going to feel and see. If mortgage rates go down, they may have a perception, the American people, that the economy is improving, and that matters for the election. According to Forbes, they said this. They said the market implied odds of a single 25 basis point cut, that's 25%, to the target federal funds rate at the Fed's September 17th through 18th meeting rose to 52.5%. So again, there's a 52% this is on Monday, that this would happen. According to the CME Group's FedWatch tool, pricing in a move this would go from 5.5% to 5.25%, or the reverse rather. The probability, they go on to say the probability of a 50 basis point cut, which again would be double, is now a 47.5%. So also, fairly likely that we're not just going to see one rate cut, but actually two, down, half a percentage, which is a lot. So the question is, why are they doing this? Because we haven't had a rate cut in a long time. Obviously, they went way up when inflation went up. The reason why people are confused about this happening kind of out of nowhere is that inflation, it just came out at about 2.8% from last month, which is like 40% higher than 2%. That's their, the Fed and Jerome Powell have come out and they've said 2% is their target inflation rate. If you're at 2%, it's not too bad. And we look at it and we're like, 2.8 is not so bad, but it's actually 40% higher than it's supposed to be. And there are a couple theories as to why Jerome Powell changed his mind. The first is that they're concerned about the poor jobs report that just came out. And I've talked about that in the past. I'm not going to get into it, but essentially jobs are not, exactly where they want to be. And it is made people afraid that we're heading into a recession. And so the hope is that by lowering interest rates, banks will borrow more money. The influx of that money will spur the economy back to life, because the concern obviously is that too much, if you make that cut, then we're going to have too much money chasing too few goods, which is the definition of inflation. And so that is the concern. On one hand, they want to spur the economy and get it back to life, so that we're not going into a recession, but we're also very concerned that if we cut the rates too early, that we're going to see more inflation. And the other theory is this, and it's that he's doing this because in September, this meeting happens to be like 6 weeks before the election, which is when things get really hot and heavy. And there's a theory that it's they might be doing it because of some pressure from Kamala Harris, from Joe Biden to, make Americans believe that the economy is actually doing better than it is. And I personally think it's a bit of a combination of the both. There are some out there who believe that the Fed is totally void of connection to the other executives, the other executive branches like President Biden, Kamala Harris, Congress. This is simply not true. If you think that Biden and Kamala Harris are not trying to influence the Fed and Jerome Powell, you're just crazy. I'm sorry. I'm not saying that Jerome Powell is necessarily listening. I think he probably is. But I'm not saying he definitely is. I don't have any data to support that. But you're crazy if you don't think that they're trying to put pressure. Of course that's happening. Of course. Now, again, that doesn't necessarily mean that he shouldn't cut the rates. That's not what I'm saying. I don't want to go into a recession. But it is concerning that we still haven't hit the target inflation and we're suddenly cutting rates and even talking about double cutting the rates. I mean, a single cut, that seems a little bit more reasonable, but to double cut the rates seems kind of scary considering we're at 2.8% inflation, and that could easily make inflation go up again and again. We've gotten so used to this idea of 8%, 6% inflation. We don't like it, but we're used to seeing those numbers because that's all we are seeing under Joe Biden so far. And so when we see 2.8, 2.9% inflation, we think, oh, that's pretty good. Bidenomics is working. But again, that's 40% higher than it should be. And that's on one hand. On the other hand, as I've said many times before this podcast, inflation compounds just like investments. So that 2.9% is compounded on all the other percentages before. And so we're looking at, prices that are 25% higher, or rather that the dollar is worth 25% less than when Biden took over the presidency. So overall, this is bad news, obviously, for the economy, but it's bad news for Trump, because of how this could affect people's perception about the economy. If they think that the economy is cooling down, or rather inflation is cooling down, that the economy is heating up in a good way, people might just forget those disastrous policies that Biden and Kamala Harris put in place. Thank you so much for watching, everybody. Please go down below, comment, like, and subscribe, and watch another video.